Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, May 31st, 2016. We'll take a look at the SPY here, which is obviously the S&P 500 tracking ETF. So essentially you're looking at the S&P 500. This is the intraday 10-minute chart, so each candle is 10 minutes. You can see that the day began at this dashed line down, and we started slightly higher. Now what I want to go over here is what does this mean in the bigger scheme of things? I mean, obviously we had a great rally last week. It was light volume going into the holiday. But today, after the holiday, we're seeing some profit taking. What is it telling us? Now, let's first of all look at a couple key factors here. Number one, we made a high here. The high of the day was 210.69. You can see it right there, the high 210.69. Now, if you go to your 60-minute chart here, and this is very important, you have to look at a previous high pivot that was not long ago. And you can see it right here. So the first thing that strikes me is that the market did not make a higher high here. So you have a high pivot, and then this is actually a lower pivot. The high here was right around 211. This is 210.69. Okay, so that's slightly a negative, right? Because if you could make a higher high, it shows you that the trend is higher highs, which is obviously a bullish signal. So right off the bat there, that is a little bit of concern to me. But the other factor is that you can see here is that if we go back here, and you can see here, we've had a lot of ups and downs, but generally we've stayed the same. Even if I go to the daily chart, guys, I want to show you this on the daily chart. Okay, so really on the daily chart, from over here, you've been in a pretty narrow range. So right over here, you were trading at around the 204 level, and then you went up and came down. Then you went up again a little higher, came down. Up again a little higher, came down here. Up a little bit less, came down, and now up a little bit higher. So really from this point over, you've been in a 204 to 210 range, right? So 204 low pivot here. The low pivot right here was right around that same level, and you've just been chopping. So for me personally, I look at this market in a slightly negative bias for the main reason that you are making a lower high here. But really, we've been in a choppy sideways action period for a long time. I mean, this is since March. Since March, guys. Okay, and if you zoom out, you can actually see even more. And this actually kind of confirms the lower high factor that I'm talking about. So you can see here the all-time highs on the spiders going back to this area right here. Okay. And again, actually, there you can go back even further there. So the high here was around the 214 and change level. Then you made a lower high, lower high, lower high, lower high. And then this is about equal if you look here. Actually, it's still a lower high than this. So that's even more negative. We can erase this other trend line here. It's inconsequential at this point. But again, high, lower high, lower high, lower high, lower high, lower high, and lower high. So really, we haven't made a higher high of a major pivot in, I mean, we're talking about almost a year now. I mean, this is actually going back to April, so this is a year ago. We have not made a major higher high pivot. That's important, folks. And I think that speaks to the general consensus of smart investors that while this market is going to remain choppy, overall, you have to be a little concerned that this market isn't doing more and isn't able to force its way through. Now, the volume has dried up on this rally. Look at this, by the way. Look at all the volume here. And then look at how as you rallied up, it just died out. I mean, that's amazing, folks. You had a little bit of an uptick on this little sell-off here, right over here. But, I mean, it has just died out, and that's not good either, because what that tells us is institutional money, which is big money, which is a lot of volume. If it's lacking, if you don't have a lot of volume, it tells you the institutions are not buyers. They're net sellers. So, essentially, what we're seeing here, in my opinion, what we've seen almost over the last year from this high is institutional selling, and then the markets will bounce up when the institutions stop selling and the small investor buys. Okay, so just a couple things I want you guys to pay attention to here that I think are important. And if we flip back here, you can see the volume today on the day after the holiday is kind of waning here. Only 57 million, just under 57 million. But nonetheless, markets are trading basically at the lows of the day. The 200 MA on the intraday 10-minute chart is approaching. I think we do touch that. My guess is we hold it. Oil, I think oil's topped, guys. I think oil has topped. Look at the reversal today. The key factors you have here. You have the even number of 50 pierced, plus you have this pseudo-OPEC leader meeting going on right now, and unless something shocking comes out of there, I bet they use it as a sell signal, and it already looks like that is the case. It's being used as a sell signal. So pretty weak price action on oil here, and if oil starts to tumble faster, you will see this market roll over faster as well. Okay? All right, guys, enough action here. I want to pass along this information. What I encourage you to do is come take the 7-day free trial to the Research Center, get involved, start learning how to read these charts. They do help you get on the right side of any trade, whether it's a stock, whether it's an option, whether it's an ETF, Forex, whatever. You can read the charts using the PPT methodology and really honestly profit for life. All right, take care, guys.